Welcome to Seeds of Wisdom team. Hop on the bus as we roll into bonds. Why it's important to follow Isaac. Bonds 101, your ultimate guide to financial stability. Most people hear the word bonds and their eyes glaze over. But guess what? Understanding bonds is like unlocking a secret level in the game of personal finance. We're talking about a whole new world of investment opportunities beyond the stock market. So buckle up because in this video, we're diving deep into the world of bonds. Decoding the bond market. Types and characteristics. What exactly is a bond? Simply put, it's like an IOU. You loan money to a company or the government and they promise to pay you back with interest. Now, just like there are different types of cars, there are different types of bonds. Government bonds are the safest, backed by the government. Corporate bonds offer higher interest rates but come with more risk. Municipal bonds fund public projects and can offer tax advantages. Foreign bonds diversify your portfolio internationally but come with currency risk. Bond ratings. Separating the wheat from the chaff. How do you know if a bond is a good investment? That's where bond ratings come in. Think of them as the credit score for bonds, issued by agencies like Standard & Poor's, Moody's, and Fitch. AAA is the highest rating, meaning the issuer is financially rock solid. As you move down the alphabet, the risk increases. Bonds with lower ratings, like BB or below, are considered junk bonds. They might offer higher interest rates, but come with a higher chance of default. The key takeaway here is to understand that bond ratings are crucial when assessing risk. Remember, higher returns usually come with higher risks. Bond lingo, mastering the basics. Let's decode some bond lingo. Face value is the amount you'll get back when the bond matures. The coupon rate is the annual interest rate the bond pays. The maturity date is when the bond issuer has to pay you back the face value. Yield is the return you can expect from a bond, considering its current price and coupon payments. Understanding these key terms is like learning the rules of a game. Once you know the basics, you can start making informed decisions about which bonds to buy and sell. The bond market, seesaw, pricing, and yield. Bond prices and interest rates have an inverse relationship. When interest rates rise, bond prices fall, and vice versa. If you buy a bond with a 3% coupon rate and interest rates go up, new bonds with higher rates make your bond less attractive. This inverse relationship is key to understanding the bond market. Be aware of interest rate movements when investing in bonds. If you think interest rates will rise, you might want to hold off on buying bonds. If you think rates will fall, bonds could be a good investment. Riding the bond market wave factors that matter. Interest rates are the arch nemesis of bond prices. When the Federal Reserve raises interest rates, bond prices tend to fall. Inflation decreases the purchasing power of your money and bond returns. Credit risk is another factor. If a bond issuer's creditworthiness deteriorates, their bond prices fall. Overall economic conditions also matter. During economic downturns, bond prices tend to rise as investors seek safer assets. It's like seeking shelter in a storm. Understanding these factors can help you navigate the bond market. Why bonds belong in your portfolio. Bonds can be a valuable addition to any diversified investment portfolio. They provide a steady stream of income through coupon payments. Bonds help preserve your capital and are generally less volatile than stocks. This makes them a good option for risk-averse investors or those nearing retirement. By investing in a mix of stocks and bonds, you can reduce your overall risk. It's like the old saying goes, don't put all your eggs in one basket. Bond investing, not without its pitfalls. Be aware of the risks involved in bond investing. Credit risk is the risk that the bond issuer will default on their debt. Interest rate risk. When rates rise, bond prices fall. Reinvestment risk. When rates fall, it can be hard to reinvest at a similar rate. Inflation risk. High inflation decreases the purchasing power of your money and bond returns. It's like watching your ice cream cone melt before you can even take a bite. Understanding these risks can help you make better investment decisions. Always do your homework before investing. Bond yields decoded, understanding your returns. Yield is the return you can expect from a bond. Coupon yield is the annual interest payment divided by the bond's face value. Current yield takes into account the bond's current market price. Yield to maturity, YTM, considers all future cash flows including coupon payments and principal repayment. Yield to call, YTC, is the yield if the bond is called before its maturity date. Understanding these different types of yields can help you make informed investment decisions. It's like choosing the right tool for the job. Bond pricing, unraveling the mystery. Bond prices are influenced by interest rates, credit quality, and market demand. When interest rates rise, bond prices fall and vice versa. Credit quality also plays a role. Higher-rated bonds trade at higher prices. Market demand can also influence bond prices. If there's a lot of demand for bonds, their prices will rise. If there's little demand, their prices will fall. Understanding these factors can help you navigate the bond market. How bonds are issued and traded. The bond market is divided into the primary market and the secondary market. The primary market is where new bonds are issued. Once a bond is issued, it can be traded in the secondary market. The secondary market provides liquidity to bond investors. It allows them to buy and sell bonds quickly and easily. It also helps to determine the market price of bonds. Tax implications of bonds. Interest income from bonds is generally taxable, but there are exceptions. For example, interest income from municipal bonds is generally exempt from federal income tax. Consult with a tax advisor to discuss your specific situation. Inflation-protected bonds. These bonds protect investors from the erosive effects of inflation. Treasury inflation-protected securities, TIPS, adjust their principal value with inflation. Floating-rate bonds have variable interest rates that adjust periodically. If interest rates rise, the interest payments on your floating-rate bond will also rise. Inflation-protected bonds can be valuable during times of high inflation. They can be a valuable addition to any diversified portfolio. Bonds might not be as glamorous as stocks, but they play a crucial role in a well-rounded investment strategy. Whether you're looking for steady income, capital preservation, or diversification, bonds have something to offer. Isaac shared photos of his bonds on the seedsofwisdomteam.com website. Link below. Why do we watch for Isaac's post? Why Isaac is someone in the know with facts about bonds. But understand, I do not have contacts. Isaac, I have buyers the U.S. Treasury, DoD, Admiral, HSBC, several big platforms that I've signed contracts with all, and they paid already for the inspection several times. Isaac photo on the website, link below, of his bonds. Think with your head, not your heart, Isaac. But if you know the truth and not lies and stories, it is better, much less stressful. Isaac. Only the truth, no lies. Stories are rumors. What others have said, if you see this, Isaac, please know that I see you first of all as a man of faith in the Lord. You are above reproach in character and grounded in the truth. I am thankful for your willingness to share the truth about this journey and thankful to walk the journey with you. Kindest regards and blessing from above for you and your loved ones. Jet Tech. Isaac does not give clues. Isaac gives cold, hard, dry facts. It is established fact that Isaac is the owner of many types of historic bonds and deals directly with the primary purchasers of the bonds. When Isaac knows that money has moved, he will tell us. What Isaac will not do is speculate and/or give mere hopium. Bernie, watch Isaac for his information. No one is going until after his job is complete. Don't care who you follow or what you hear, there is no getting around that fact. Sam Oliver is Goldilocks. His bonds that he holds also holds our future in his hands. Wiley Morgan. I'll be honest, I have relegated my expectations for my currency to the status of a lottery ticket in the drawer. That being said, Isaac is literally the only voice that I subscribe to on the matter. So thank you for the posts. Have a great day, Isaac. Nightbreed. Isaac seems to have built a solid reputation within the bond and currency communities for his knowledge, transparency, and commitment to sharing facts over speculation. Here's a breakdown of why Isaac is seen as a credible authority in the field. 1. Direct involvement and contracts with major entities. Isaac's network includes significant institutions like the U.S. Treasury, Department of Defense, DoD, HSBC, and other major financial platforms. His direct contracts with these entities lend credibility to his claims, as these are recognized powerhouses in finance and government sectors. Having signed contracts and received payment for inspections suggests he's part of transactions or operations that involve the exchange or authentication of valuable bonds. 1. Ownership of historic bonds. Isaac is known to hold various historic bonds, making him a principal party in bond transactions. This ownership places him in direct contact with buyers, adding weight to his insights since he isn't relying on second-hand information. His connection with primary bond purchasers means he is a first-hand witness to bond-related financial activities, giving him insight into bond valuations, transaction timelines, and financial movement. 1. Commitment to transparency. Isaac emphasizes sharing only the truth, no lies, stories, or rumors. This dedication to transparency, along with his refusal to speculate, has earned him the trust of his followers. Isaac's grounded approach of sharing cold, hard, dry facts contrasts with the often speculative nature of bond and currency discussions, which many find reassuring and reliable. 1. Reputation among followers as a man of faith and integrity. Testimonies from people like Jet Tech, Bernie, and Sam Oliver as Goldilocks reflect deep respect for Isaac's character and faith. They see him as someone who leads with integrity and factual accuracy, further strengthening his credibility. Isaac's followers appreciate his focus on facts and view him as a person grounded in truth, which makes him a trusted voice in the community. 1. Impact on community expectations. Isaac's updates are closely followed by those invested in bonds and currency, as his statements reportedly reflect real financial movement. For many, his guidance brings reassurance and stability amid otherwise volatile or uncertain financial situations. Statements like, "Watch Isaac for his information, no one is going until after his job is complete," suggest that he is seen as a critical figure in bond-related developments, implying that community timelines are aligned with his updates. In summary, Isaac's network, his commitment to facts over speculation, and the testimonies of his followers position him as a person with unique access to the truth in the world of historic bonds. When others make comments about bonds, have they been right? Follow the Isaac with bonds and with the top paymasters for facts. Isaac appears to be held in high regard as a reliable source for factual updates on bonds, particularly in the realm of historic bonds and related financial transactions. Here's why others in the community believe he's uniquely credible compared to many others who comment on bonds. 1. Consistent accuracy over time. Isaac has a reputation for providing clear, verified information rather than speculation. His insights reportedly align closely with actual movements in the bond market, especially those tied to government and large financial institutions. This consistency has built his credibility, while others making predictions or speculative comments are often proven wrong. 2. Direct connection with top paymasters and institutions. Unlike many commentators who rely on hearsay, Isaac is directly involved with top-tier institutions such as the U.S. Treasury, HSBC, and other significant financial players. His connections with primary purchasers and paymasters give him first-hand insights into payment flows and timelines, which enhances the accuracy of his updates. This direct access is rare, and it's why others in the community place such trust in his information over that of other sources. 3. Track record of avoiding speculation. Isaac is known for giving cold, hard, dry facts and avoids hopium, or overly optimistic but unfounded projections. This cautious approach helps his followers set realistic expectations and reduces the stress associated with bond speculation, which often runs high. By not engaging in rumors or speculative narratives, Isaac's insights stand out as grounded and dependable. 4. Community endorsements. Testimonials from people like Bernie, Jet Tech, and Sam Oliver reflect a shared sentiment that Isaac is the authority to follow for accurate information on bonds. They regard his updates as the definitive source, advising others to avoid speculation and instead follow Isaac for clear facts. This community backing reinforces Isaac's position as a beacon of reliability. 5. Isaac's role as a timing indicator. For many, Isaac's updates and actions are considered a barometer of bond market movement. Statements like, "No one is going until after his job is complete," suggest that the community views his status updates as a signal of real progress, timing, and even market shifts. He is seen as someone who will only provide information once he has verified its authenticity, unlike other sources who might prematurely share information. While others frequently comment on bond developments, they often lack the direct access, restraint, and accuracy that Isaac brings. His strong connections, track record, and dedication to truth without embellishment make him the preferred source for bond-related facts in the community. For those seeking verified information, following Isaac offers a much more stable, reliable perspective on bonds than the majority of voices in the space. In the global currency reset, GCR, and revaluation RV landscape, there's a common belief that historic bond redemptions are set to occur before or alongside currency exchanges. Here's how bond payments and the GCR RV typically relate. 1. Priority of bond redemptions. Historic bonds are often viewed as the initial financial instruments to be redeemed in the GCR RV sequence. The reasoning is that bond payments require immense liquidity, and their redemption would signal that substantial funds are in place for the rest of the GCR RV transactions. Paying bondholders first is often seen as a way to inject stability and confidence into the system, with funds then trickling down to currency holders. 1. Sequential payout process. Many in the community suggest that paymasters and financial entities overseeing the GCR RV process have set bonds as the first to be paid. This aligns with the notion that once bonds are redeemed, funds will then be released for the currency exchanges. By addressing bond payouts first, it allows the bond market, which consists of large institutional players and high-value assets, to set a stable foundation for the following phases. 1. Liquidity triggers. The belief is that bond redemptions act as a liquidity trigger for the GCR RV. In this theory, once bondholders receive funds, those funds signal a cascading liquidity release across currency holders. Essentially, bond payments confirm that large sums are now moving in the system, paving the way for RV currency revaluation. 1. Role of paymasters and institutions. Individuals like Isaac, who deal directly with paymasters and large financial platforms, are seen as key figures in tracking these redemptions. Their involvement with top institutions like the U.S. Treasury and major banks provides a window into the actual flow of funds, which many believe will begin with bond redemptions before reaching currency holders. 1. Community consensus and speculation. In the GCR RV community, there's a widely held belief, but not an official confirmation, that bonds will be processed first. However, caution is advised, since the order of payments and timing are often subject to change and contingent on complex financial and regulatory mechanisms. While it's not officially confirmed by global institutions, the prevailing view is that historic bonds will be paid out first as a foundational step in the GCR RV process. This sequence provides liquidity and signals readiness for broader currency redemptions, making bond payments a critical precursor to the larger GCR RV rollout. Nobody has these high-level contacts and sitting with the paymasters. Follow the facts and do your own research. Isaac will post Victoy in his room once he is finished. Seed of Wisdom team will send out notification emails to the ones subscribed, post in Telegram rooms and YouTube. Don't forget to give this video a thumbs up if you found it helpful, and hit that subscribe button for more financial insights. Until next time, take care and stay informed.